Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bearish scenario where we are looking for a zigzag to the downside in a 535 after wave B has then ended up here, and they're looking for an impulse to the downside in wave C, where the most common target for wave C is between the 1 and the 1.236, taken from the high to the low of A to the current high over here for B, which is between 27.2k and 26.5k. Now you also see that I have vertical lines on my chart, and these are fib times taken from the high to the low of A and also put on the current high of wave B to compare the time it took to develop wave A with the potential time it can take to develop wave C, as wave C tends to be a bit more of a lazy structure and end after the 1-to-1 fib time, which is now positioned on Saturday the 19th of August at 6 p.m. Central East European time, and the 1.618 is sitting at the 26th of August. So this is an interesting area to keep an eye on, also because of the additional support around this area for wave C. We have this blue target box over here, which is an important support area between 26.8k and 27.4k, and just below, in confluence with the 1.236, another area between 26.2k and 26.5k. If we then zoom in to that wave B structure, we've been looking for a WXY sideways combo structure where wave W is an expanding flat in a three-wave structure like this, wave X can be any corrective structure, and wave Y is a zigzag to the upside, which is exactly what you want to see, because in a double combo, a WXY sideways structure, wave Y and wave W cannot have the same structure, meaning wave Y could not be an expanding flat because W already is. So this was very nice, also hitting the most common target area for wave Y, pulled from the low to the high of W to the low of wave X, with some bearish CVD divergences at the highs for a move to the downside. The invalidation of this scenario, and this being the high of wave B, is if the high over here is going to be taken at 30.2k. If we then zoom in to this structure over here, we want to see in the bearish scenario impulsive structures to the downside, because we are looking for that wave C to the downside, which then is a 5-wave structure. So of course, to look for a 5-wave structure, the move has to begin with 5-wave structures as well on the micro time frame. And if we now zoom in to the micro over here, you can see that I have a diagonal on my chart, which is a zigzag diagonal. So a leading diagonal can have two different structures. It can be a 5-3-5-3-5, so you have an impulse correction, impulse correction, impulse, or all of the waves are zigzag structures. And in this scenario, this wave 1 over here is a zigzag structure, and then an ABC to the downside, followed by a zigzag in wave 2, looking for a zigzag in 3, 4, and eventually wave 5 to end a leading diagonal. Then you would expect a wave 2, before then a 3 to the downside, because eventually this is then only the first, then you have a second, and then you expect continuation to the downside like this. Now in this scenario, wave 2 retraced to the 0.382, taken from the high to the low of wave 1, which is a rare target for a wave 2 in a contracting diagonal, nonetheless a target. If we look at the target for wave 3, you have to pull a trend-based sub-extension from the high of 1 to the low of 1 to the high of wave 2, toggle on the 786 and the 886, as that is the most common target area. A wave 3 is not allowed to go below the 1-to-1, so that is the invalidation, which is sitting at 28.8k, and the 0.618 is a rare target. And what is interesting about this wave 3, as we are then looking again for an ABC zigzag to the downside, is the confluence that the 786 has with the support box that I have over here on the chart, which is sitting between 28.9k, or basically 29k, and 29.1k. So if price moves to the downside, this could be an interesting target area for wave 3, for then a zigzag in a wave 4, eventually a wave 5 to then finish the leading diagonal structure. Look for a bit more upside, maybe test some of these areas for then a potential wave 2, before then a bigger wave 3 to the downside. If we then zoom out again, go to the medium time frame bullish scenario, then in the bullish scenario, the low is in and we are looking for moves towards the upside. So then we have a wave 1 or A that is already finished over here, looking for a wave 2 or B that is then also already finished, as this then has to be the low, and you're now going to be looking for a wave C or a wave 3 to the upside. In this scenario, we are then looking for a 1-2, another 1-2, for then eventually a bigger move to the upside in a wave 3, 4, and a wave 5, where the most common target for wave C is between 35.1k and 36.7k, and for a wave 3, you really want to see the 1.618 being hit at 39.3k. The main question, however, is this the low? And as explained in many previous videos, counting this as the low is very difficult. This structure over here does not count well for this being the low. If this was the low, however, and price would move up impulsively, the probabilities were higher for the bullish scenario. But the fact that price over here took this low on the left once again definitely lowered the probabilities, because there's not really any great count to make this the low for continuation to the upside. Now, if we do zoom in at least to this structure over here and we go to the low time frame, then what we're looking for is that double 1-2, right? So we then have a 1-2 in green, wave 1, wave 2, and then we're looking for the blue count, 1, 2, 3, 4, 5, which is then a part inside of that wave 3. So the blue count is a count inside of the bigger wave 3 for then a 4 and a 5 that is left. Now, what you also see is the text box over here. Now, the blue wave 1, this one over here, is likely a zigzag when counting it on the lower structure. It's very difficult to count a nice clean impulse over here, which lowers the probabilities for the bullish scenario. And also this blue wave 1 over here is bigger than the green wave 1 in both time and price. And if we look at this blue count being the lower degree count, because the green count is the higher degree count, you expect the green count to be like this, and then inside wave 3 you have the blue count, meaning the blue count is a lower degree count compared to the green count. You actually want to see the second wave 1 being less, or at least shorter in time, and also shorter in price. So this again does not really work with the probabilities for the bullish scenario. Nonetheless, if we are looking for a wave 2, then the most common target for a wave 2 is between the 0.5 and the 0.786. The 0.5 has already been passed and the 786 is sitting at 29k. The invalidation for this scenario is price taking this low over here. And if we then zoom in to this structure and look at this from a bullish perspective, because it has to be a wave 2, meaning this has to be a 3-wave structure to the downside, then this scenario is something I have on my mind, where the first structure is then a zigzag to the downside, then we have a corrective wave X, for then another zigzag to the downside, where then we were looking for a double zigzag structure, which is a sharp correction. You can use a WXY for a sideways correction, but a WXY, the letters, are also used for a double zigzag or triple zigzag in a WXYXZ, sharp correction to the downside. So in this scenario, I'm then looking for a WX and eventually a wave Y, where in a WXY, most commonly, wave X will break the trend line between the origin of the first wave A down and the high of wave B. So preferably, price manages to get above this trend line here, and the most common target for a wave X in a double zigzag is between the 382 and the 0.5. So if wave X takes a little bit more time, could break above the trend line, hit the 0.5 over here for then a sharp zigzag to the downside for wave Y. And also for the targets for wave Y, it would be good if price manages to make a higher high than the one we have over here, because for wave Y in a double zigzag, the most common target really is the 1-to-1 level, which is now right on top on top of the 886, as you can see. And the 886 and the 786 over here, by the way, might look a little bit confusing, so let me drag this to the right side. The 786 and the 886 are pulled from the low to the high, because we're looking for this to be then a 1-2 continuation, right? So these over here are FIB levels for a wave 2. The 886 is a very rare target for a wave 2. And the 786 is still a common target for a wave 2, but you can see the 1-to-1 at the moment, taken from the high to the low of W to this high over here, is positioned on the 886. That's not actually what you want to see. But if wave X can make a higher high over here around the 0.5, you can see the 1-to-1 is moving up. And if price would move potentially even to the golden pocket, then it is on top of the 786, which would be nice for the low of a wave Y. However, a WXY double zigzag, it's not very common, and also nonetheless it is still a deep target. Price first has to move to the upside. If price is going to do this, the probabilities for this scenario are going to be incredibly low. You really want to see price moving to the upside. If you look at the CVD divergences, not too much has changed compared to the morning video. All these bearish CVD divergences played out. More locally, we did have some bullish CVD divergences, but also the bearish one over here. So these are countering one another. That's not great in general. Also, if this is a first move to the upside, a retracement, and we're looking for higher, the probabilities this move to the upside being a corrective structure is higher than an impulsive structure, because price over here hit the 886 retracement taken from the low to the high over here. Now, if we go to the AGGR chart and quickly refresh to see maybe what has happened or anything has changed, there's not, again, too much going on compared to what I already said. We have the bullish CVD divergences, but as you can see here, also the bearish ones, lower high on price, higher high on the yellow CVD over here, which is not what you want to see really if you're looking for upside, right? There's a lot of downwards pressure, as you can see with the red lines as well. So we have to wait and see how this is going to work. We do have a little bit of resistance above price as well over here. In case price would move to the upside, it's important to keep an eye on this area between 29.5k and 29.6k, and if price would manage to go through that area, the next area of resistance is between 29.7k and 29.8k. Now we do have news coming, so make sure you trade safe at 2:30 Central East European time. Could lead to high volatility, so make sure you have a plan, stick to your strategy. And then finally, the probabilities of the different scenarios. Well, as you can see, we are mainly looking for downside on the micro, on the medium time frame, and on the low time frames. On the medium time frame, the bearish scenario currently carries the highest probability. Also on the low time frame, currently this scenario over here is the more higher probable scenario, also based on what we see over here on the lower time frames. And then the micro bearish scenario currently looks better compared to the bullish one, as with the bullish one you still need to even have a move to the upside really. If price just keeps going down like it is doing at the moment, it just doesn't look that good, right? So from an Elliott Wave point of view, currently the probabilities are geared towards the bearish side, so more downside expected. Again, if price would move up, we first have to get through this resistance, and then of course we observe the reaction over here. We wait patiently, we observe the reaction, we don't catch knives, FOMO, YOLO. We are reactive traders, and based on our plan, strategy, and entry requirements, we enter the yes or the no. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.